Your eligibility for the upcoming $2,000 tariff dividend check can be destroyed by the same simple mistakes you made during COVID. This dividend is still a proposal that depends on Congress, so preparation is how you win the moment rules go live. During COVID stimulus rounds, millions lost weeks or months because their payment rails and identity data did not match. The new dividend will likely use tax return data, banking data, and identity matching, so sloppy records become expensive. Today, you get the real-world error list from stimulus season and the prevention checklist to stay first in line. Mistake 1 was outdated direct deposit information because closed accounts caused deposits to bounce back into manual processing queues. When a deposit bounces, the government does not forget you, but your money can loop for months before reissue. Fix it by confirming routing and account numbers on your next tax return and keeping one stable receiving account. Mistake 2 was assuming paper checks would save you because mail delays and address errors turned payments into missing money cases. If your address is wrong, identity letters and replacement notices never reach you, and your timeline collapses instantly. Fix it by filing an address update with the IRS and confirming your mailing profile before any program begins. Mistake 3 was claiming the wrong payment amount, especially on the recovery rebate credit line during COVID filings. The IRS sent letters like letter 6475 to show payment totals, and wrong numbers triggered adjustments and delays. Fix it by using official letters in your IRS online account history, not memory, not screenshots, and not social media posts. Mistake 4 was ignoring Treasury offsets because some payments and refunds were reduced for debts like past due child support. People thought the IRS stole their stimulus, but Treasury offset program rules can redirect certain federal payments. Fix it by checking your debt status early and understanding offset notices, because surprise offsets feel like missing money. Mistake 5 was filing with the wrong status, especially head of household claims without a qualifying dependent. Wrong filing status is not a small typo, because it changes credits, thresholds, and triggers verification questions. Fix it by documenting dependent eligibility, residency rules, and support tests, and keeping evidence ready if asked. Mistake 6 was double claiming dependents because two adults tried to claim the same child on separate returns. That creates reject codes, delayed processing, and a fight you cannot win without amended returns and documentation. Fix it by coordinating family filings early, especially in blended families, shared custody, and multi-household support situations. Mistake 7 was filing too early without all income forms, especially for gig workers missing one 1099. Payment apps and payers report electronically, and mismatches trigger notices that freeze refunds until review is complete. Fix it by waiting for all W-2 and 1099 forms, then comparing totals to your income transcript. Mistake 8 was using temporary bank product refund accounts through preparers, then expecting stimulus deposits to land there. Some stimulus deposits bounced because the account was closed after fees, creating chaos and returned payments. Fix it by using your own direct deposit account you control, not a short-lived third-party processing account. Mistake 9 was failing identity verification, because fraud filters forced taxpayers into verification steps before releases. Identity letters like 5271C or similar requests can pause processing until you complete verification correctly. Fix it by monitoring mail, keeping your IRS account accessible, and responding immediately through official channels. Mistake 10 was skipping the identity protection PIN, especially after prior fraud, then losing control of e-filing security. The IP PIN is a 6-digit lock that stops thieves from e-filing in your name, and it resets annually. Fix it by enrolling early, retrieving the current year code, and storing it securely for you and your tax professional. Mistake 11 was clicking scam links because criminals copied government branding and harvested logins and bank details. The IRS warns it will not demand sensitive information by email or text, so those messages are traps. Fix it by using only .gov sites and typing addresses manually, never through ads, DMs, or forwarded links. Mistake 12 was assuming moderate income meant one number, when eligibility is usually based on AGI or MAGI. Political language is not a legal threshold, and rumors about 60,000 or 100,000 can mislead you. Fix it by planning around your actual AGI range and filing status, then adjusting once official law defines cutoffs. Mistake 13 was treating stimulus money like taxable income, then reporting it as wages and inflating your tax bill unnecessarily. That error reduced refunds and created panic because people believed they owed tax on money that was never taxable. Fix it by treating benefit payments exactly how official guidance classifies them, and never invent your own tax category. Mistake 14 was ignoring official IRS notices showing what you actually received, then double claiming credits you already got. Many households guessed amounts from memory, and that guess turned into delays when the IRS corrected the return. Fix it by reconciling every letter and online account entry, then entering the exact totals with zero improvisation. Mistake 15 was never running a payment trace when the system showed issued, but the money never arrived. Some people waited forever when a formal refund trace process exists and can force resolution when needed. Fix it by using the official refund trace workflow and filing the proper statement when a payment is truly missing. Mistake 16 was assuming married couples always get one deposit, when programs can split amounts across accounts or spouses. This created confusion, wrong claims, and family fights because one spouse saw money and the other saw zero. Fix it by reconciling each spouse's record trail, then documenting totals before you claim anything on a return. Mistake 17 was answering a scammer's verification call, then giving away bank details, SSNs, or login codes. Scammers used urgency, fake case numbers, and threats, and people complied because they were stressed and uninformed. Fix it by remembering one rule. The IRS does not demand money or private codes by phone, text, or email. Treat every Claim Now message as hostile, because scams explode when a new benefit becomes a trending headline. When Congress publishes a final bill, your readiness will convert into speed, while unprepared households enter delays and confusion. Your first step is to review your last return and identify banking, address, dependent, and income areas where errors happened. Second, clean your identity footprint by ensuring your SSN data, name spelling, and date of birth match across systems. Third, confirm your direct deposit account is active, stable, and capable of receiving federal payments without rejections. Fourth, build your evidence pack now, because proof is what ends manual reviews and unlocks frozen timelines. Fifth, file accurately and on time, because late filings reduce your control and increase your exposure to fraud waves. Sixth, monitor only official updates, because eligibility rules are not real until Congress authorizes and agencies publish instructions. Subscribe to Tax and Borders, like this video, and share it with anyone who does not want repeats of COVID chaos. This content is for education only, not tax advice, so consult a qualified professional for your specific facts.